My question is, if you look back at your videos from the cycle top in 2021, is there one or more clues or indicators from that time in retrospect did signal a top? And how might this guide us to a potential top in 2025? Well, just for the record, I just started making videos in 2021, and I've been in Bitcoin for a long time. But what I was not aware of was how shady and manipulated the cycle was. Okay, coming from TradFi, I had probably too much trust in all the shenanigans, all the players that were there when they were all a bunch of poopsters, very bad, evil people. I have stronger words, but it's a kid show, so I won't say them on this Father's Day. But one thing about me is I do not like making the same mistake twice. Okay, I will literally whip myself raw, you know, the thing they do, to punish myself for missing a top and making a mistake. And therefore, we, together with the development team here, we put a lot of money into building a whole bunch of tools that would make sure we do not make the same mistake again. Let me walk you through a couple of them just to give you some ideas. First of all, we built the top and bottom indicator for Bitcoin, which is built off about 22 on-chain indicators. Right now, we're orange. It's peaked down. When we get to dark orange, be careful. Start taking some profits. When we get to red, eject your belt. Hedge like hell, or whatever. Reduce your position. I never recommend selling all of your Bitcoin again, and it'll be even hard for me to sell some, but who knows? Anyway, we'll see when the time comes. I think we still have a little ways to go in this market right now. But again, this will identify when we start getting overheated. Right now, we're orange. We're kind of just above middle of the road, despite the price of Bitcoin being over $105,000. We also built the Lila model. The Lila model is what we use to identify how high things can go, layers, etc. And per this, there is, again, that 5% chance we could hit 158, 160K this year, but it's a 5% chance. And when you do mathematics, you don't want to wait for that 5% chance. That's too risky. So we built the Lila model on top of the top and bottom indicator. We also built the ATR model. Again, it looks at the history of the asset, how it runs in bull markets. Very clear from this chart. You can see blue is bull, orange is bear. That's it. That's all you need. If you have one chart in Bitcoin, this is it. This is it. It will turn orange. I don't know if that's going to do that in 130 days or never. We don't know. We'll talk more in a few minutes as to how the price of Bitcoin could keep on going up one player, but that's a separate issue. Right now, we're still looking strong on the ATR model. We're just off the highs, nearly $112,000. Bitcoin price about just shy of 106,000 as we speak. That's the other tool. Again, layer in, layer out. Absolute key to investing success. And finally, we built the profit-taking model for people that don't have the ability to pull triggers and sell or know when to layer out and layer in. Then we have this. You configure it based on exactly how much you want to retain, what your risk tolerance is, how bullish you are on the asset, and it'll tell you, it'll optimize the layers at which and how much you actually sell to get out and take profit. And the amazing thing about this is when you crunch the numbers in profit taking, imagine you plan to sell 100% of your bag of an asset, okay? And you start layering out at, say, level 5 or level 6 with different allocations. The amount that you leave on the table is actually very little at the end of the day, even if the price went to 160,000. Okay, if you start layering out, you don't leave a lot of money on the table. But the danger is, historically, if you hold the bag and then you hold that bag through a bear market, that can be very painful. As we saw last time, we went from 69,000 down to 15,500. And a lot of people held. So these are the lessons that we learned and the tools that we built to make sure we have the risk tolerance. And there's another angle to this as well. It's not just taking profit and moving to cash, but taking money out of what is becoming a jaded, tired horse that is close to the top and rotating that money into something that's about to explode over the next 2 or 3 years. That's the big overarching 30,000 foot strategy that we employ here.